Let's take a trip around the world this morning. Here's what you need to know before the bell. Starting with the overall major market of the S&P 500, yesterday the markets did come back down and kind of ended flat for the day, but sitting right on top of the 100-day moving average. Now we broke above that important resistance level, testing it yesterday. So markets need to rally here from here, turn this resistance into support. But right now the bullish trend is still very much intact after that brutal kind of August, September, October period that we had. Buy signal still intact right now, as well as the markets are a little bit overbought. So again, over the next week or so, expect a bit of a pullback. Any type of pullback to support is going to be a good area potentially to add exposure to your portfolio as we head into end of the year. It's been a very, very strong advance here, so expecting a bit of a pullback, a small kind of consolidation would not be surprising. However, if you take a look at the S&P, that is one story, up about 15% this year. If we take a look at the equal weighted index, that's a very different story. Actually, the S&P 500 equal weighted index as basically flat for the year. Has not done much at all. And again, outside of those top really 7 to 10 stocks of the overall market cap weighted index, the underlying index itself has not done much. In fact, the situation gets a whole lot worse if we take a look at the small and mid cap stocks, which have had absolutely dismal performance this year entirely and have not really participated in this recent rally at all. In fact, this has pretty much been a top 10 stock rally in the market, Meta, Applesoft, Google, etc. That's been what's driving the markets. Despite that the small cap and mid caps are on buy signals, not really getting any performance at all out of that sector of the market. So for now, continue to remain focused on those kind of large cap stocks in your portfolio. Jumping over to commodities, take a look at oil prices. Oil prices have had a very big decline as of late. This, of course, will feed into inflation a bit, but we're very close to a buy signal here short term on oil prices. So we could see a bit of a rally in oil prices back towards about $85 a barrel heading into the end of the year. That would not be surprising. So potential trade here for energy stocks might be a good setup here to add to companies like, say, an ExxonMobil or something in your portfolio. If this buy signal triggers, could see a little bit of a rally in oil stocks there. Gold, on the other hand, has been kind of just a tough year overall. It's had its moments of shine because it is a precious metal, but has pretty much traded sideways most of this year. Has not really done much. Recent decline here, sitting on support. You have the 50, the 100, and the 200-day moving average all clustered together right here around 1950. So again, that really needs to hold here for gold prices. The break below that, we're going to retest that 1800 level. Again, so watching gold here, it's on a sell signal from a fairly high level. So again, there is more downward pressure on gold prices here temporarily. If we see weaker inflation data, that may press gold prices a bit lower here in the near term. Lastly, taking a look at the dollar continues to be very strong. After basically that kind of fall off in the dollar that sparked a whole bunch of commentary about the end of the dollar, de-dollarization, etc. back in July, we were writing articles that really didn't make a lot of sense. Since then, the dollar's had a very, very strong rally, has been consolidating that rally here, and has worked off a lot of that overbought sell signal, now getting close to triggering a buy signal here. So we could see another leg higher in the dollar as we move into next year. That would also correspond with more flows into U.S. Treasuries. Of course, that would lead to lower yields. That's what you need to know before the bell this morning. I'm your host, Lance Roberts, for realinvestmentadvice.com.